Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down of a bearish trader who was selling into every single bounce. On the edge of orders hit the bid. Until one day they subscribe to Routine Trader and realize they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, new trading week. It's been a while, retail trading team. I'm Mastro. I'm coming to you live from Puppet Show HQ, and this is going to be your routine briefing. So please excuse the intro little mix-up there. I left the YouTube open, so what would be a first routine briefing in about a week without a little technical issues. So hopefully that's all we got, because I have a lot of interesting stuff for you. Well, not really too much. But a fun-filled, tightly packed, and hopefully nice and brief routine briefing for you today. So let's jump into it, get started, and see what we have on the table here. Okay, so I took an opening trade today, and that was just based on the various things that you saw in the newsletter there. Various things being, we had a really nice hammer candle that is usually a very strong reversal type look, and so I took that right out of the open. We did have that open test drive as well, so everything looked really nice for a bullish play out of the open, yet we did get that unwind, and I did take a stop out on that. As we are speaking right now, the bulls are trying to turn it around, so just a bit of a stop run. That's going to happen. You got to take those stops, I think, and that's just the way it is. So we do have a big catalyst coming tomorrow with the CPI number, so I think really this is all just positioning and liquidity grabbing. Before that, you saw the net short overnight inventory. Well, you can see it on your screen now. We had that net short overnight inventory. Let me make myself a little smaller here so it's not obscured. There we go. And that kind of followed through into today's session. We really haven't seen a bit of volatility, and that was one thing I talked about in my newsletter. We'll get to that in the slide. So it really wasn't convincing. That's, again, why I like that opening trade. Yet so far that did get stopped out. I will look here if we do get some type of rebid to perhaps get back in, but I'm not too enthused. I really don't like the tape today. It's kind of been that typical September tape has been. So far we've seen September very choppy, more difficult trading conditions than one would like, but that's just what we got here. So you can see this warm-up document in the description of this video. It's updated pre-market every day with the various levels, most important being in bold, and of course the expected move zones there, which we are kind of bouncing from today. So that's what we got for the warm-up, but really what I'm most focused on is going to be this chart here. So we have an inside week within an inside week, and I expect that to resolve tomorrow. Obviously, a CPI can be nothing burger, yet I think that we're going to break one of those levels. And those on the low side from that prior week is going to be 44.85, and on the top side it's going to be about 45.80. So there's a lot of resistance above, a lot more resistance I think than support, at least for that particular candle. So we'll see what happens there, but really we're just watching to see how this resolves, and I think we will likely see follow through one way or another, whatever that way may be. So this is kind of what we got going on today. Is why I like that overnight low trade as well. You have the bottom of value right about where the current low of day is, and as we speak again, we're getting a little bit of a rally, so I do like that trade. So I will look for that rebid if we get it. potentially down there. Again, I did take the stop on the first one, so it's a little frustrating, obviously, but that's just kind of what happens. Yesterday, if you saw that newsletter, we'd had a really perfect trade that didn't take any heat at all, so we have to take a little bit of heat today, I guess. But this is really what I'm watching here, what happens around the bottom of value. If we do start to make a move and do start to break out, I think it's a pretty quick move to 45.68. So what does that look like? I think that's very simply just a breach of that 45.40 level. Once we breach that, I think it's, like I said, it's a pretty quick move to at least that 45.70 area. So what is going to be above us? What is the magnet that I've been saying for the past couple of days? Simply that SPY gap. So we do have a gap in the SPY. It's at about that 449 level. So we'll be watching that very closely as well. So it's going to be a little bit before that 45.70. I think it's about 45.55. So we'll see if there's any supply there. If you look on my warm-up document, you can see I have a really wide supply zone in that area. It's that I said 45.50 to about 45.70, just because there is that SPY gap there as well, on top of some other bits of supply. So really, magnet I think is at to the top side at least is going to be that 449 gap. In terms of downside magnet, we do have a SPY gap from the open. I don't really include these too much in my analysis, but again, when it's super choppy like it has been so far this September, you do have to, or I think it behooves one to maybe explore a couple other levels. And so because we have such a tight chop, I'm just looking at that level as well. But really, the main focus is going to be that gap above and that 44.85 level below, because I think that the next major trend move is going to involve however that inside week, double inside week little pattern resolves. So the final chart for today is volatility. I am not really interested in volatility until we get to about 1740, until we pop, or at least get near. Really, I want to see us touch the top of that triangle there. We're definitely in a free fall, or we were in free fall, I should say, but now we're kind of consolidating near the bottom of the range here. But again, volatility not particularly relevant. Again, if you recall, I believe it was July and into August. I didn't really talk about volatility too much because when it looks like this, when it's in the middle of a wide pattern, it's just irrelevant. And what happened, what started that big leg that we had at the end of August? Well, we had a break of a pattern volatility. So that's really when it becomes important, when it gets near the resolution of either upside or downside of these bigger patterns. So like I said, I'm not too worried about volatility. I just kind of want to bring up that you didn't see it catch a bid really at any point during the down move. So again, that is a cap in the, or a feather in the bull's cap, as they say, until we start to see some type of push and volatility. I don't think you're going to see any significant extended move to the downside. You need to see that fear come back in. But there's a lot of catalysts. Like I said, there's CPI this week. I think there's some type of OPEX as well. Quad witching, I think they call it, at the end of this week. So there's plenty of catalysts. FOMC next week. I thought it was Wednesday, but it's actually next Wednesday. So CPI this Wednesday, FOMC next Wednesday. Lots of catalysts coming up. So we'll keep an eye on that, just kind of in the peripherals. But really, main thing right now is the price action and the various levels that you'll see on that warm-up document, and more specifically, the inside week resolution, 44.85 to the downside, 45.80 to the upside, so really wide range there, and a push through this 45.40 for that potential squeeze. So again, levels all in this warm-up document. You can access that in the description of this video. I update those every day. A lot goes into those, so I think they're pretty darn good levels, and yeah, we'll see what happens. So that is really all I have for you, Mr. Volatility, Schmolatility, Juice Ball in the chat there. Quite a bit of chop today, just kind of the theme. We'll see what happens. I'll be looking for one more trade. Like I said, potential rebid of that same trade from earlier, yet I'm not really going to force anything. I'm not too enthused about this price action, just for various reasons. You can look at it on your own chart. Super ugly. So we'll see what happens there. It definitely has been an option seller's market, not a futures trader's market. As you can see, anybody who follows my trade log, the new one does not look too good compared to the old one. So that's what we got going on. And that is all I have for you until tomorrow. Tomorrow's briefing is going to be after CPI, so all the fun's going to happen before then. So I will have those levels up. I'll leave them, the ones today, for the pre-market. I'm not really going to mess with those until we see that CPI move. So then right before 9:30, I'll have those other ones up as well. So that is all I have for you for today's short and sweet routine brief. I'm going to try to make this short and sweet from now on, just so I get more than 2 viewers. I think they're too too long for most people. So if you do like that idea, please give it a like. The video like, that nice little thumbs up will help us get beyond those 2 viewers. And OJ, thank you for being one of the 2 viewers today, Mr. Juiceball, in the chat there. So besides that, I appreciate any engagement, be it in the comment section of this video, responding to the newsletter itself, or on Twitter where you can find me at Routine Trader. So I'm going to read Juiceball's chat here before signing off. Full of sound and fury, signifying nothing until tomorrow. That is quite poetic there, Mr. Juiceball, and I think that's a good way to end it. So I thank everybody for your attention, and stay classy until tomorrow.